Bitcoin and Ether are pairing some recent gains after encouraging inflation reports and continued hopefulness for a less hawkish Fed. Joining us now to discuss the crypto markets is Tastycrypto Head of Digital Assets, Ryan Grace. Welcome, Ryan.
Hello. Thank you for having me on the show. Good morning.
Good seeing you. So, of course, we've had some interesting moves, of course, in the past 24 hours. We saw some liquidations. We're now more or less around 25. We had this massive run-up, actually, during the course of the past few days as these banks were falling apart. And these were, but at the same time, when it got word that they would, I don't want to say bail out, but when the government was going to make it all nice and better, we saw this rally in crypto. Can you explain it? I mean, first of all, was this in many ways a bailout of crypto? Second of all, what is the market sentiment right now?
Yeah, I don't think that this is a bailout of crypto, but I think that the cracks have started to emerge. We typically see throughout Fed rate hike cycles, the Fed will hike if something breaks, and I think arguably something has broken here. It took about 475 basis points to get there, and just the pace of that hike, was really unprecedented. And so now I think when you look at Bitcoin or you look at crypto as kind of a forward indicator of liquidity and what might be next, there are indications in terms of the price action that it's possible the Fed is going to go on pause here, or possibly even, if we look at interest rate probabilities from Fed funds futures, a week ago we were talking about a 50 basis point hike. Yesterday we were looking at a 25 basis point hike, and here today we're pricing in no change whatsoever. And if you look forward on the curve, we're actually pricing in cuts at the end of the year, and I think that could ultimately be beneficial for crypto prices, for risk asset prices. You remove some of the headwind really when you think about where we are with this rate hike cycle.
Right. I mean, do you think that has more of an effect than this theory floating around, at least, that some of the money went into crypto as a sort of a safe haven, if you will, that people pulled money out of the likes of Silicon Valley Bank and Signature and Silvergate because and ultimately went into Bitcoin because that was a safer place to get their money ultimately than if they were to say leave it in a bank. Is there any, I don't want to say is there any truth to that, but is there any truth to that? And or do you think that this run-up really was a result of people looking at lower rates and saying, this means more risk is available to us?
Oh, Lawrence, I think there's definitely some truth to that. I think it really depends on your time frame. So if we look at the short term here, absolutely. When you look at, let's say, Circle's USDC stablecoin and some of the volatility in there, as we saw a DPEG over the weekend, massive bid in Ethereum. You saw the bid in Bitcoin as well. But when I look at what's happening in the DeFi space, when you look at decentralized exchanges, we'll use Uniswap as an example. You look at Ethereum trading at a significant premium there relative to spot on a centralized exchange such as Coinbase. And so I think that's an indication that, given the uncertainty, given the volatility in this space, there has been a bid in your large cap crypto assets. We certainly see that in terms of Bitcoin dominance here and the uptick there. So I think in the short term, those concerns around, let's say, the banking system or, the short-term concerns around the USDC stablecoin definitely put a bid into your large cap crypto assets. But I think if you're looking for a catalyst for next bull run in the longer term time horizon, it really is liquidity injections, or at least the removal of the interest rate increases here that we've seen that have acted as a headwind. And I think, ultimately, if we look at what are, some of the, I suppose, the themes on crypto, or if you look at Bitcoin specifically, it is, or I believe has been intended to be a safe harbor when you think about currency debasement, when you think about, the actions from the monetary authorities that we've seen historically. So I do think that will support over the long run, and as well in the short term, that bid did come from some of the volatility that we experienced here near term.
What are your thoughts on the sentiment on the stablecoin market? We're seeing Circle's USDC regaining its dollar peg earlier this week, but is there still skepticism or, discomfort around the stability of stablecoins?
Absolutely, and I think that you'll see that continue for some time. I certainly would count myself in this camp where I was of the opinion that USDC was a fortress. And here we're to find out that with $3 billion in assets with Silicon Valley Bank, all of a sudden we start to question the viability of this. Fortunately, Circle came out and made some statements that supported the market. But I think that you're going to continue to see skepticism around, centrally, I wouldn't call them centrally planned, but centralized stable coins. We certainly don't have really an alternative that's decentralized. There's been skepticism that surrounds USDT as well as USDC now. This could also prove to be a great stress test, I suppose, for USDC if we make it out of this unscathed. But I do think that there will continue to be skepticism here in the near term, and rightly so.
Do you find it ironic that the crypto markets? Well, Bitcoin was created to as an alternative system to the financial system crises of 2008, and yet now it seems, is it being guided by the banking sector, and is it being impacted by the banks and their crisis and et cetera? Do you see that continuing?
Yeah, I think again in the short term that will continue. I don't think that this will become untethered from the volatility we've seen across risk assets that we see in markets that are a function of whether it's economic growth on one hand or it's monetary policy on the other. I think you're going to continue to see that relationship. I would hope that over time, if in fact Bitcoin does emerge as a safe haven or is ultimately a life raft to the debasement of currency, that the correlations between crypto assets and traditional assets start to become a bit more minimal. Though during this period of time, we've continued to see those hold up for the most part. So I think over time it will, but in the near term, it's definitely not going to be immune from the headline risk that we see or the volatility that we've experienced in not just the equity market, but certainly when we look at interest rate volatility.
So. Look, we're awaiting the Fed decision here, whether or not they'll raise, as you mentioned before, whether or not they'll raise 25 basis points. It was almost like a sure thing for 50 basis points, but now it's either 25 or 0. Let's say we do go 25. Let's say the Fed said, look, we're staying the course, to hell with everything. This is a blip in the screen. Do you think that ultimately cuts down the enthusiasm for crypto here? Do you think that will, do you think that the markets are anticipating, at least the crypto markets are taking that 0 basis point increase bet right now? Or do you think that, it's pricing in already, even though we're kind of seeing it in the Fed funds futures, FUD, the tool there that the CME puts out, that there is, of course, that 25 basis point increase enthusiasm, if you will. Do you think that I guess the question is, if they raise 25 basis points, do you think that cuts crypto?
No, I don't think so. I think that the crypto market is most likely less focused on what happens next week with the Fed. The Fed is in a difficult place here. Do you pause or pivot even, which I don't think is really being listed at all, but do you pivot in the face of 6% inflation when we look at headline CPI still 3.5% unemployment rate and an economy that's arguably still growing? I think it's really difficult for the Fed and its credibility should it do that. That said, when you look at crypto markets, I think on a forward-looking basis, the market is focused now on really the idea, or I would argue maybe the fact, that we are much closer to the end of this hiking cycle, if not at the end of it already, than we are in the middle of it, or even if you look back a couple of weeks ago, where there's this idea that maybe we see a bit of entrenched inflation, that the economy is a little bit stronger, that the Fed's going to have to hike more than anticipated when you the terminal rate. And so I think that now that's what you're seeing, is that we are, again, closer to the end. Doesn't necessarily mean that we're going to see stimulus all of a sudden, but the idea that we're going to continue to get 50 basis point hikes on a regular basis is very unlikely, given the cracks that have emerged here in the financial system.